Good investors understand the market and have a clear strategy for success. But the best investors have something extra: the personality traits to win the investment game in the long run. Hey, it's John from StopSaving.com here, and for this video, I've researched and listed the top 10 personality traits of some of the world's best investors in no particular order. I've also included an interesting quote from each investor to provide some insights into how they think about the markets. So, if you're wondering what type of behavioral characteristics will help you achieve more success in the markets, you'll want to take a page out of each of their books. First, we have Benjamin Graham, who was well known for his discipline. Graham is the father of value investing. He was also Warren Buffett's mentor. Graham had a disciplined approach to picking stocks, to analyze a company inside out to find hidden value before the rest of the market. His method was based on strict rules, which he laid out in his best-selling book, The Intelligent Investor. Today, Graham's book is still the go-to manual for value investors. And here's an interesting quote from Graham that sums up his disciplined philosophy. Investing isn't about beating others at their game, it's about controlling yourself at your own game. At number 2, there's Warren Buffett with patience. The Oracle of Omaha has beaten the market time and again by being a patient investor. Buffett's investment company, Berkshire Hathaway, currently has around half of its portfolio in Apple stock. Some would say that's a bit risky, but for Buffett it makes perfect sense. He did his research on Apple early on, and he had the patience to hold the stock for the long run. He's a true long-term investor, and he couldn't care less about short-term gains. And that's well summed up in Buffett's famous quote, "The stock market is a device for transferring money from the impatient to the patient." Moving on to number 3, we have Philip Fisher with Thoroughness. Fisher was a pioneer of growth investing. His investment philosophy was built on investing in high-quality companies with the potential for long-term success. Fisher was extremely thorough when picking stocks. Before he invested, he made sure he had a detailed understanding of a company's operations, management, and market position. This helped to make some exceptional investment decisions, like buying Motorola in 1955 and holding on to it until he died in 2004. And Fisher once said, "I don't want to own a lot of good investments, I want a few outstanding ones." Next up at number 4 is John Templeton, known for his optimism. Templeton was a glass half full kind of investor. He had a knack for buying low when most people were bearish. For example, he bought Japanese stocks in the 1960s when most Americans wouldn't go near them. Templeton's optimistic outlook helped his Templeton Growth Fund average around 14.5% per year from 1954 until he retired in 1992. Templeton had a great understanding of investor emotions at different times in the market, and he said, "Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria." And now for number 5, Peter Lynch with Curiosity. Lynch ran Fidelity's Magellan Fund between 1977 and 1990, clocking up an average yearly return of 29.2%. Under Lynch's management, the fund grew its assets from $18 million to $14 billion. Lynch was always curious about how everyday businesses work. By leaving no stone unturned, he was able to spot hidden investment gems before the herd. This included high-growth companies like Taco Bell and La Quinta. Here's an excellent quote from Lynch which sums up his approach to investing and life in general. "The person that turns over the most rocks wins the game, and that's always been my philosophy." Moving on to number 6, there's Icahn, well known for his tenacity. Icahn made activist investing and corporate rating popular among hedge funds. His strategy involves buying large stakes in companies with hidden potential and then pressuring management to make changes for the good of shareholders. Icahn has a roster of impressive deals to his name, which has influenced companies like Marvel Comics, Netflix, Blockbuster Video, Pan Am, and Texaco. His tenacious nature has given him the backbone to push for corporate changes, despite resistance from company management and founders. In Icahn's own words, he enjoys the hunt much more than the good life after victory. Number 7 is another hedge fund king, George Soros, with confidence. Soros' quantum fund compounded by over 30% per year from 1973 to 2011. His bet against the British pound in 1992 during the Black Wednesday UK currency crash is a classic example of his confident investment style. Here, Soros broke the Bank of England by shorting $10 billion worth of pounds sterling, earning him a staggering $1 billion in profit. Soros' conviction to back himself with big, concentrated bets has set him apart as an investor and fund manager. And Soros said, there's no point in being confident and having a small position. At number 8, there's Ray Dalio with Open-mindedness. Dalio co-founded the world's biggest hedge fund, Bridgewater Associates, which currently has around $125 billion worth of investments to its name. By being open-minded, Dalio was able to consider a wide range of viewpoints and ideas to refine his investment approach. This helped Dalio and his team create the risk parity investment strategy. The strategy goes against the grain of the traditional 60% stocks and 40% bonds portfolio. It tends to put more in bonds and commodities than stocks, and you can learn more about Ray Dalio and how to replicate his all-weather fund in this article over here, and I'll leave a link to that in the description. As for Dalio's quote on being open-minded, he said, "The more you think you know, the more closed-minded you'll be." For our 9th investing legend, we have Jim Simons, who had incredible vision. Simons was a former mathematician and codebreaker who started the Renaissance Technologies, or RenTech hedge fund in 1982. Today, RenTech is the second biggest hedge fund group in the world, with over $100 billion of assets under management. RenTech has an employee-only fund called Medallion, which has earned an astonishing 60% plus per year on average since it began trading in 1988. Simons had the early vision to use mathematical models and pattern recognition in the markets, and in case you're wondering, RenTech keeps its investment strategies on the down low. And here's a wise quote from Simons that you might want to apply to your own investment philosophy. You have to be willing to question conventional wisdom and think for yourself. And last but definitely not least, there's David Swensen with Adaptability. Swensen was the Chief Investment Officer at Yale University from 1985 until his passing in 2021. In that time, he grew the Yale Endowment Fund from $1 billion to over $31 billion using his Yale model of investing. Swensen revolutionized endowment investing by adapting to the changing investment landscape. He spread his bets into non-traditional asset classes like private equity, hedge funds, real estate, and natural resources. This approach yielded excellent returns and influenced endowment strategies worldwide. Swensen believed that for every smart person on one side of the question, there's another smart person on the other side. So which personality traits resonate the most with you as an investor? Let us know in the comments. It's true that most of us don't naturally have all of these 10 characteristics, but when it comes to investing, you can learn how to develop them over time. You can then mix and match these traits to suit your investment style. For example, you might make confident bets like George Soros with the optimism of John Templeton. In that case, you might want to temper those bets with the adaptability of David Swensen and the patience of Warren Buffett. And remember, it's not about copying these investing legends to a T. It's about taking a bit of what they've got, adding your own spin, and building an investment style that makes the most sense for you. Thanks for watching until the end. If you found value from this video, remember to subscribe to the channel and click the notification bell to get more of them as soon as I publish them. And don't forget to like the video if you did. This helps our content reach more people on YouTube. You can also find a more detailed written version of this video on our website, stopsaving.com. I'll leave a link to that in the description, along with a link to our free newsletter for how-to guides and investment content across crypto, stocks, metals, and more. So until next time, take care.